what's going on? Strat Soldier here for the weekend shift. I got something good for you. I got something really good for you. But let's get to the charts first before we get into what I it's a surprise. All right. All right, it's a surprise. I know you're like, man, this is supposed to be a live show. I know. Just relax, relax. I'm gonna be in the chat live. Just relax. I got something really good for you. All right. So let's look at what we've been looking at. Let's look at what has been going on in the SPY right now. If you're new to the strat, this is how I trade. I got all four charts up just like this. I got the month, the weekly, the daily, and the 60. All right, all four time frames up like this. That shows me what? Come on now, I say it every episode. Say it out loud, just like Dora the Explorer. Time frame continuity. That's right. If you're sitting next to somebody that knows the strat and they didn't say time frame continuity, teach them, learn them. All right, teach them. We're here to make each other grow. So this shows me time frame continuity, and time frame continuity is like the weather. It's always there. And what we're seeing right now is full time frame continuity to the upside. It's green on the month. All right, green on the month. You had they were not gonna cut interest rates. You got geopolitical pressure bringing the month down. Yet we were 2-2 reversal down on the month on SPY. Now what are we looking at? Now we are looking at a possible outside month to the upside. All right, hold on. Got to be careful though. It does not go scenario 3 on the month until it gets to 565.16 to be exact. All right. So, but we know for a fact outside bars exist. And once it comes back into this range, it is a failed 2 to the downside, going back green. All right. So now it's green on the month. Let's blow up this week. This is this week. All right. Right here. I know you guys know what week it is, but I got to put the little arrow on there so you don't get lost in the sauce. All right. Here's my broadening formation on the week. And what we are seeing here, 2-2 reversal back up. It does hit magnitude. That was awesome. We talked about that last week. All right. So I'm never about predicting. The strat is always about trading actionable signals, time frame continuity, and broadening formations in the most highly probable trades. All right. So me and everybody else was talking about this possible reversal to the upside, but it went in force. All right. Very good. It hit magnitude. It was awesome. You should have been trading anything and going after anything taking out last week's highs. I've been talking about that on the mini market reviews. Go watch those. They're only like a minute long. Also, I've been posting about them on Twitter. All right. No one calls it X. I've been talking about it on Twitter. All right. Over and over and over. So if you are in a trade right now where the week is red or the week is way down in here, it's still inside. If it doesn't go 2 up next week, get out of that thing. It's a mess. All right. Get out of that sucker. You need to be trading things that are going 2 up on the week. Here's your days. All right. Hits the 2-2 reversal back down on the week. Here's your bottom of the broadening formation, 2-2 reversal back up. You did have this shooter. This is last week. This is a shooter that did not go in force. Continues to price all the way up, right? Trend. If you need to put I talked about this on Twitter. If you have a hard time seeing where the price is going, you can use a trend line. All right. There's nothing wrong with this. I'm not going to say nothing about wedges and all that crap. I'm not going to do that to you. All right. This is about you. This is not an indicator either. This is you using a trend line to remind yourself the price is trending to the upside. You have identified the trend. 2, 2, 2, 2, 2, and it's continuing to the highs. All right, that's okay. So here is the trend on the daily chart. If these bars start moving down and break this trend line to the downside, you have a reversal. All right, that's just a tool. All right, the trend line is just a tool, just a visual, but you can clearly see that. You got back into this level of a reclaim on the daily chart right here, and then magic how it stops at the top of the top of that scenario 3, right? Anyway, there it is. Hits 554.84 and stops. Interesting. So we will see what they have next week. No actionable signals for next week. All it is just looking for the 2-2 continuation up. You got Powell talking at Jackson Hole, whatever that is. A couple of years ago, he was talking at Jackson Hole and he was talking too much and made the market drop like 28 points in a matter of 2 hours or something like that. It was ridiculous. You got to look it up for yourself on the year and date and times, but that's what happened. Dow Jones, same thing. QQQ, same thing. All right. So now you know what's going on in the market. Now you know. So what I have for you right now is a special guest. Special guest. He's not necessarily going to be talking about the strat. I brought you an interview with Charts, who showed you how to trade ORB. All right, open range breakout. Zeus Trades is going to be on the show in just a few seconds. All right. Now he's going to be talking about trading how he talks. All right. So you stratters out there, I know you're going to be in the chat. I know you're going to be making comments. All right. We are not here to say anybody else is doing anything wrong. All right. I'm bringing this interview to you, bringing somebody here with different information for you so that you can see what he's doing, see if it works for you. All right. I told you it was summertime. A lot of you guys, I suggest you still should be taking a break, especially if you're a new trader. Especially if you're new trader, I think you should be just paper trading or working with a prop firm or something like that, or just watching what the price is doing. And if you like Zeus Trades, you like what he's doing, it makes sense to you, and you're like, I'm gonna go with Zeus and Strat. Thank you for bringing them to me, but I'm going with Zeus. That's okay. All right. It's about learning. It's about getting you to create those winning positions and work with people that resonate with you and make sense to you. All right. So Zeus, if you can put your video on, that's up. Hey, what's going on?
What's going on, brother? How we doing, man?
Good. I need a sound effect that has like clapping and cheering. I got it. I don't have it yet. I'll get one on here.
We'll include that next time.
Next time. I appreciate you being here. First of all, I want to say I appreciate you being on here. I wanted to do this last week, but you were traveling. That's on Twitter, so hopefully that's okay to say. You are a busy man, and you are in that Discord in your group every day. I see your posts. I've been following you at least since 2022, I believe, and you know what you're doing. So I appreciate you being here. It is an honor for me, and I'm ready to learn something. I got my notebook. I got my pen. We're gonna learn something.
Yes, sir. Let's dive right into it.
Okay, all right. Is there anything you want to say about yourself first, though, before we get in the charts? Give somebody
Yeah,
else
I
some
give a
time
little
to get some
introduction about
paper.
myself. So overall, I did start trading back in around 2019. Originally started off with literally just common stocks. I originally was kind of playing with small caps and things of that nature, and really just more so like investing in a long-term aspect. So like I literally had Apple pre-split at $97. I had Tesla at $66. So
Ooh,
that's kind of like what started my trading career. And then from there, ended up transitioning into options a little bit. I had a friend that kind of was like telling me, hey, you're really good at common stocks. Look into options. So been doing options since about 2021 to be exact. And then literally October 2023, that's where I transitioned into more so futures trading. So
okay.
right now, futures is I still do options obviously because options is kind of what made me, but futures is where it's like has a lot of my focus right now.
That's awesome. I just I'm gonna get back into options. I just funded my futures account. Gonna get back into that. I was doing options back in late 2021, early 2022. I did it for a while, and then I was like, nah, let me try something else. But yeah, I'm definitely looking into those futures. Definitely, I'll be doing that this last third quarter, fourth quarter. Definitely gonna get into that. So I'm gonna be paying attention to this. Thanks for being here.
Thank you for having me, man. So
Oh.
let's dive right into this. So first things first is what we are going to do is kind of give you a good introduction of equilibrium blocks so you have a much better understanding of everything that I'm talking about. So essentially we can kind of go through any time frame. Equilibrium blocks happen on all time frames, every time frame, every day. So that's one of the main aspects why I really love them and kind of utilize them within my trading. So here's a really good equilibrium block that we can actually dive into right here. So essentially, an equilibrium block consists of three candles. Now, we only focus on the bodies of the candles. We don't necessarily care about the wicks too much. We only want to see the bodies. So what creates an equilibrium block is three candles. It can be either two up close candles and a singular down close candle, or two down close candles and a singular up close candle. So for this example, I'm sorry my chart doesn't look as normal as everybody else's. So the down close candles are the blue candles that we have here, and the up close candles are the gray candles.
Okay,
Now,
so normally I would use so green for us it's usually goes green means buy, red means sell. So you're saying your your green bars are gray and your down bars are blue?
yes, sir.
Okay, okay, just making sure. All right.
And the reason why I kind of have changed that is because I feel like a lot of traders, including myself at that time, was very like attached to the colors of the candles. So where it's like, okay, let's say you're taking longs, for an example, and you start seeing red candles. You're very hesitant to start to think, okay, let me kind of get out of this trade because it's going against you. Doesn't mean it's going against you. It's just ultimately retracement. So
Okay,
to kind
makes
of remove
sense.
that, bit of emotions and psychology aspect of trading, I just kind of like made it very neutral colors.
I like it. That makes sense.
Yep,
I always wonder why people like change their colors, all kind of crazy colors, and I keep them basic for the new people. That makes sense though. That's a good explanation. So it's more like the psychological side of it. That's good.
100%. So with this example right here, we actually have an equilibrium block with this 3 o'clock candle. Currently, we're on the 5 minute time frame. So this is from 3 a.m. from earlier, August 16th. So if you come here and you notice we have a singular down close candle followed by a singular up close candle followed by another down close candle. Now, if you look at the bodies of these three candles, that creates your equilibrium block. Because if you look at the body of this down close candle, notice how it's inside the range of both of these other candles, these other two down close candles. So at this given point in time, when I say price, I refer to the bodies of the candle.
Okay.
So price essentially is at a equilibrium at this given point in time. Buyers and sellers all agree that pretty much at this given point in time, what is this range? So at this given point in time, 19,677 down to 19,670, price is at a equilibrium. Both of them agree that this is a fair price. Now, at some point, buyers either are going to take control or sellers are going to take control. And that's where we kind of have our setup. We don't really want to take a trade based on a consolidation phase. We want to take the trade based on the expansion phase. So if you come here and identify, notice how I have identified this equilibrium block here. Now you kind of always what something I personally like to do is mark out the time frame in which they came from. And the reason for that is because if you mark out the time frame, you can understand that, hey, if we're bouncing for maybe 5 to 10 minutes, it's because we're probably only testing a 5 minute or 10 minute equilibrium block. However, if let's say you have a 5 minute equilibrium block and then you come into an hourly equilibrium block, the higher time frame is always right. So at that given point in time, if you have two different equilibrium blocks, chances are the 5 minute might get disrespected because you're coming into an hourly level. The higher the time frame, the stronger it is. So
Okay.
for this example here, what we can identify is we have this bearish equilibrium block that forms. And why do I say it's bearish? Well, because we currently are going into a downtrend and we have a singular up close candle. Now, this candle right here, the 305 candle, that confirms your equilibrium block. Now, we don't necessarily take a trade the moment the equilibrium block forms. We want price to come back and retest that level. So why I picked this example is this is a really great setup because the following candle at 310 forms your equilibrium. So at this given point in time, we have our entry model. Our entry model is telling us, hey, go short. So what I like to do is enter off the equilibrium, and I like to put my stop loss more times than not at the top wick of the equilibrium block candle that formed. So because this is the down close candle, I like to put my stop loss at the top wick of that candle. More times than not, it's going to play out. There are some times to where you may actually get stopped out. However, if you do get stopped out and you notice that price only wicked you out and then goes back your direction, just re-enter the trade.
Okay. Yeah, that's what we do too. That's awesome. I like that. I like that because I like that better than I like that a lot better getting stopped out as opposed to like hoping it's gonna go hey my it's gotta go it's gotta go the way I thought it was gonna go. It's got to. You know what I mean? I'd rather get stopped out and say, you know what, I'm out and then but if it sets back up, I'm getting back in it. I okay. You got my attention.
No, 100%. And see, I think that's very, very important of, kind of just having those tight stop losses. But then if you understand that, hey, especially when you're trading NQ. ES isn't as volatile as NQ, but with NQ, there are many times to where the market is kind of going to test your patience, test your discipline to see, okay, cool. Let's see if he's really going to hold this trade or not. And that's just how NQ trades.
Mhm.
So within that, we're going to actually go into an example earlier today that we took on live in a bit. So with this example, pretty much this is a perfect trade setup. We get the recess of the equilibrium block. We deal with literally 2 points of drawdown. And as well, this is essentially focusing kind of on NASDAQ chart. However, if you trade QQQ, NQ is the same thing as QQQ.
Right.
So looking here, you want to identify the equilibrium block. After you've identified the equilibrium block, now you want to understand, well, where's your PT? So when it comes down to price targets, I only use pivots. I want to know where was the last time that price pivoted. And
Mhm.
considering here we're on the 5-minute time frame, the last time price has pivoted has been back at the sell side liquidity that I have marked out here at 19,612. So
Is that right? That's 942 ticks?
58 points.
Man, that's amazing. Yeah, yeah.
Yep.
Are you really holding it for that long?
Yes, sir.
That's amazing because I see people, they trade the futures and it's a 5-minute chart and they're in maybe 2 or 3 of those bars, 6 at the most, and they're done. You're
Yep.
saying you hold this sucker all, I mean, it makes sense because you got your stop. You are
Yep.
protected, but you're holding this sucker all the way down there.
You kind of have to. And the reason why there's times to where I will take a trade, and I
Mhm.
kid you not, let's say NQ comes down to 19,621 and doesn't hit my PT. That trade literally will come back, hit my stop loss, and I take the loss. How I view trading is it matters more to be disciplined rather than just making money.
Okay. Okay.
So
Okay.
that's kind
Okay.
of, yep.
No, so that's okay. So you're okay. I'm sorry. I'm on it. I'm listening to what you're saying. So if this thing goes all the way down, even though it doesn't hit your target, you're gonna either hold it to see if it does, or if it retraces all the way back up, you're gonna it's more important for you to hold your stop and keep it where it's at instead of just take profits at help here, it's coming back up. I know for a fact this ain't gonna hit. I'm gonna go ahead and take it. Like take some profits off.
Yep.
You're just like, okay, all right.
Beats stop loss or nothing. And the reason why is because discipline you can replicate. Luck, hope, you cannot replicate that. It's
Uh-oh.
impossible. And
That
that's
might
just
be
the
the first quote. That might be the first quote of the show. You can't replicate luck. That was good.
Yep.
Man, all right. Hey, if you ain't figured it out yet, you're gonna have to trade with some testicular fortitude when you're hanging out with Zeus. Boy, I tell you what, because I've seen this thing. If this thing retraces, let's just say, can you put that cursor at the end of the gray, end of the green? You got a hammer at the bottom. No, no, no. I'm sorry. It's still in the green zone. Very at the bottom. Keep going down, down. This guy. You got a scenario 3. I see personal from the strat. I see a scenario 3 up, and then that thing goes in force. It starts moving up. Like I'm taking something, right? I mean, you're like, no, I'm not taking nothing.
Yep.
That's tough. How
And
did you? How did you get to a point where you're like, okay, I'm sticking with my stop, and that's it.
so honestly, I used to trade trend lines a lot. And then January 2021 or 2000, January 2024, literally like this year, I told myself I'm done using trend lines. And the reason behind it was because trend lines can create a bias at times. So to mitigate that bias, I kind of said, hey, let's remove the trend lines and just strictly focus on one essentially entry model. And within that, we always know that, hey, price goes from liquidity to liquidity at all times. So
Yeah.
even when price is during a retracement, chances are it's going to take out a lower time frame liquidity target before pushing back higher. So that's where we like to capitalize on the move. Like if I would describe my trading style, it would be essentially liquidity to liquidity.
Okay.
I don't
Liquidity to
necessarily
liquidity.
care to hold on to the craziest extent of the trade. No, because at the end of the day, 58 points on futures, that's almost $1,600 or a little under $1,200.
That's why I was asking you if you're holding all the way down there. You know, because that's a lot. That's a lot. Like that's amazing. And that's why that's exactly I was like, well, hold on, because like I said, other people have showed me things, and even even Mark Douglas, you know, the great author, Trade in the Zone, he even talks about just holding for, you know, 6 pips, you know, 6 ticks. That's what it is, 6 ticks. You know, and he'll hold for 6 ticks and then take profit, be done. And and that makes sense in the book, but you're like, nah, bruh, it's the stop loss or nothing. So this is good. This is good.
And while you're on Mark Douglas, we can talk about that really quick. So I used to agree with Mark Douglas a lot with his knowledge that he provided. I think he's a great author. Now, there is one problem with Mark Douglas. He was never a profitable trader.
No. Oh,
So,
I gotta look that up. I don't know about that. Oh no.
profitable trader. No, he talks about it in one of his interviews. It's like an hour long. And then that's why he transitioned into helping these hedge funds with trading psychology.
Ah,
So when you're kind of like, I respect Mark Douglas as an author, but as a trader, I wouldn't say so because he was never profitable. So like he's good at psychology, don't get me wrong. But if you were never profitable at trading, I don't feel like you can actually teach me exactly what I need to know.
right. That makes sense. Man, I'm gonna look that up. That man, not only did you're showing us something different, you kicked the bee's nest halfway, not even halfway through the show yet. I gotta look that up. That's wild.
Yeah.
That is wild. Okay. All right. It's stop
I
loss
would
or nothing.
suggest, I would suggest another author a little over Mark Douglas, that
Okay.
actually is a very successful trader and a very successful, I don't really want to say gambler, but a poker player as well. Jared Tendler. You might have heard of him.
I'm not sure what any book
Uh,
titles.
The Mental Game of Trading.
Yeah,
That
okay, I got that one. Yes. Yes, that's a good one. It's the inchworm theory where you're you know you're using
C
game
plus, B plus, A plus, you
yep,
work on your C plus to eventually get to where your C plus is today, that
yep,
a year down the road, your C plus game is going to be where your A plus game is right now.
yep, yep.
Yeah.
That was 2022 for me. I went through that book. That's a good one. I like that one a lot. Because you know, on my like for example, my A game is I'm trading things or full time frame continuity. You know, I'm putting my stop, you know, break even. I'm adding to my trades. That's the A game. B game, you know, that's when you know, you a little bit, you know, you're taking actionable signals, but you know, things aren't lining up. And then the C game is it's the usually the worst example of how you're trading. So it was like I wrote down like taking stuff that's not full time frame continuity or not taking actionable signals, just jumping in. Like I had a slew of mistakes I was making because I'm learning as well, and I thought it was a you know continuing to learn, always learning, and that's a really good book because it's not just he does talk a lot about trading, but it's not just you can apply that to anything. It's not just trading. That's a good book. All right, that's a good one.
That is the only trading book that I think traders really need. Just because, to an extent, what really pulled me into that book and made me love it was when he starts talking about greed.
Hmm.
And I think a lot of traders think greed is a negative thing. But greed is not necessarily a negative emotions whatsoever, because greed is just how he puts it in the book is greed is just telling you you deserve more because you honestly believe you can do more.
Hmm. All right.
That's the point of
He does say
greed.
that. He does say that. He does.
So, like when I heard that, I was like, wow, this is what I needed to hear because I would take trades sometimes and like, for an example, kind of like how we talked about earlier, where let's say you took the hammer and the hammer went all the way back up to my stop loss or something, right? I would look at that trade and I would write it down as a loss and say I was greedy. But then it's like, no, I wasn't greedy necessarily. I strongly believe that, hey, I know I can make more money as a trader. So why not hold that trade?
All right. That's good. I like it. I like it a lot. And you got your stop loss. I mean, if you truly just based on that logic, if you truly believe in your stop, why not leave it there? So here's another question. Are you going to take that just to add to it, or not add to it, but along with that, do you ever take your stop and just set it break even you lose nothing? You ever do that?
No, sir. And the reason
Okay, man. All right, Zeus, we're doing it. I need to fill this cup back up. This is wild. All right, I'm listening.
No, sir. So the reason behind that is because there's a lot of times to where the market is going to go back to your entry level. And then because of you putting your stop loss at break even, well, you didn't win money, but you didn't lose money either. And that's the psychology, that's the kind of like the psychology aspect of trading is a lot of traders prioritize, and I'm going to say traders, human beings, they rather not lose money than win. And that's something that's very big within trading. Like a lot of
That's
people
true.
kind of prefer to say, "Hey, oh, green is green," but it's like, bro, you made $2, and then the trade actually ended up hitting your price target.
Yeah. Yes.
So I
Mhm.
don't agree with that statement of green is green. I think of it more so as like discipline is discipline. It's whether it hits your PT or hits your stop loss. There's no in between.
Wow. All right. All right. We're only a few minutes into this. This is going to be good. I all right. Discipline is discipline. You can replicate discipline, you can't replicate luck. That's the quote of the whole show so far. So far. Keep going.
So going into this example right here, how we like to essentially enter off of equilibrium blocks. I personally like to enter off the body. Once we retest the body, anywhere between this range you can enter, but I will always put my entry at the start of the equilibrium block. The reason behind that is because I genuinely want to be in this trade because I'm very confident in my edge. So when you are perceiving the market in that style, you don't necessarily care to, oh, let me try to save an extra couple ticks. No, as long as you get into the trade, that's all that really matters because you understand where the market's likely to gravitate towards next. So
Okay.
after that, once we enter our trade here, we want to then identify, well, where is the draw on liquidity? You don't have to necessarily target a low of the day or anything like that. You don't have to target these lows down here or anything of that nature. What I like to do is really just target, well, because we're trading the 5 minute, where is the next 5 minute sell side liquidity? And the only sell side liquidity that we actually essentially have is down here back at 19,612. I'm not going to really mark these levels out as sell side liquidity because based on a 5 minute time frame, these aren't really pivot points. These are pivot points if you were to look at the 1 minute time frame, but based on a 5 minute, these are not pivot points whatsoever. So you want to get your PT from the same time frame you're entering off of. So because we've got the setup formed on a 5 minute time frame, the only 5 minute sell side liquidity that we have is down here.
Okay.
And from that given point on, we want to then I like to utilize the lower time frames as well to kind of tell me and structure the market in the aspect that we need to pretty much see what the market's doing in a correct manner. So what I mean by that is if we are likely to see a reversal here on a 5 minute time frame, the market is fractal. So if we were to go down to the 2 minute time frame, we should also see bearish price action, which we do end up seeing. So for this example here, this is going to take a little bit of more so smart money concepts and things of that nature to kind of truly identify the bearish price action movement. So for this example, we have a volume imbalance. A volume imbalance very quickly is a gap between price. So remember what I said earlier, price is the bodies. That's all we care about. So when I say price, it's the bodies of the candles. So that's where the terminology price action comes from. So notice how we have this gap here. And you're going to notice something within trading is price should never have a gap. If you look at all of these body closes every time, essentially where a body opens is likely where a body is going to close and vice versa. Or where a body closes is likely where the next candle is going to open. So if you come here, a good example to pretty much learn and understand volume imbalances is if you were to remove all the wicks off your chart, you're going to notice price doesn't really gap up within the bodies. The bodies are pretty much always connecting. So what does that tell you about the wicks? I like to say wicks are pretty much noise. Wicks are kind of like to scare traders. But if you look at this, this is a chart with absolutely no wicks. Notice how the market is fairly respected and you can identify the trend, you can identify market structure, you can identify everything that you kind of need to see within trading. So once you do see a gap in price, that's now kind of giving you more indication of, okay, cool. Is price going to hold up this volume imbalance or not? And if price does not hold up that volume imbalance, well, that's literally signaling that price is likely going to do the opposite. So if you were necessarily bullish here and you thought price was going to eventually push back higher, well, because we ended up closing below and creating this volume imbalance, and then not only just that, but if we come back and turn our wicks back on, notice how we come back and retest that wick. Do we ever get a body close back above it? No, we do not. So
No.
by us not seeing a body close back over that, that's now telling us that, hey, that volume imbalance that we just created is actually being respected. And because it's being respected, what is that likely to signal? More downside to come.
Mhm. Okay. All right. Yeah, because in the strat we do count the wicks just because the price did trade there. Someone got stopped out there. You know what I mean? Someone got what was that 19,672, something like that. 70, 76, no, 672. Yep. So yeah, the price traded there. Uh but yeah, I've never seen charts with no wicks before. That's pretty interesting. So like I said, you got my attention now. Volume imbalance, and we're not necessarily talking about ICT, are we, or are we, or are we? That's a better question.
Some of the concepts are. So
Hmm.
equilibrium blocks are something that I essentially came up with. And
Okay.
how I kind of came up with this concept was I was trying to learn ICT's order blocks, except order blocks never made any sense to me whatsoever. Like they were like every time I'm like, is this an order block? And then somebody would say, no, that's not an order block, not necessarily. Then it was just like, okay, well, what is this?
Yeah.
I never really learned order blocks. Now that where I am in my trading today, some equilibrium blocks are also order blocks, but not every order block is an equilibrium block. So how I kind of like a good analogy to this is how a rectangle or how a square is a rectangle, but a rectangle is not a square. That's a good way to see equilibrium blocks.
Mhm.
So
Every chinchilla is a dog, but not every dog is a chinchilla. Got it. Yes.
oh, So looking here at that 5 minute time frame, if we go back to the 5 minute, notice how this is where we pretty much start that trade setup. Then once you come down to like a lower time frame, because the market is fractal, we want to see lower time frame confirmation within that trade setup. So we want to see the volume imbalance get respected. We want to see us pretty much continuously pushing down. We want to see this fair value gap as well, also paired within that volume imbalance.
So,
So very
so
tiny.
you're managing, you're watching the lower time frame for confirmation, or are you managing it from the
Watching for
lower time frame?
if price was to disrespect this and come back up, I'm not getting stopped out because it never hit my stop loss. But this just gives me more confidence that hey, price is going to continue to push lower
Mm-hmm.
and continue to push lower nonstop because every single bearish POI is getting respected. So what a
Mm-hmm.
POI is a point of interest.
Okay.
So because all of these bearish point of interest are getting respected, that's where we pretty much have confirmation that, okay, price is likely going to continuously gravitate down lower and lower and lower.
Okay.
Here we
Great.
go.
Mhm.
Oh, go for it.
No, I was just saying, no, no, this is good. Again, this is a little bit what we do in the strat, manage it. So I tell people to, we'll take the higher time frame trade, like a 60-minute, 30-minute, and
Yeah.
then a lot of people will go down to a 15-minute or a 5-minute to manage it from there. And that's just to keep our, because we always push our stops toward the price. So we will get stopped out with profit because it reversed on 15-minute, like we're out. So, but I like how you're using the smaller time frame as confirmation because yes, price is fractal. If it's happening on the 60-minute chart, it has to be working on the 5-minute, the 2-minute. It has to. Um,
Yep.
and then in the strat also we would say let's just say you took a reversal to the downside, a shooter and force on the 60s, to reversal down, but then on the 5-minute you're seeing this price move back up, but it's not hitting my stop, and then it consolidates and then continues down. That potentially could be an ad. Like, okay, I know they're selling now. We got people that were short covering. They were covering to get out of their short positions, and now this thing is now they're selling again. Add. Like, do you ever do that? Do you ever use your smaller time frames to add to your positions?
Sure. I can actually show you an example just yesterday. Like literally when I landed back in the States, I
Mhm.
kid you not, I got in my Uber and I was just like, yo, this is a really clean setup. I know where price was going. So I just continuously built a position over and over and over by literally adding on a 1 minute time frame and adding to my fair value gaps. So every time price would come back and retest the fair value gap, I would add again. And it's because I was like, hey, price is 100% going to push up from here.
Yeah. All
So
right.
I do add, but
Mhm.
more times than not, I like to pretty much have a very good, comfortable starter position to where if we add, ads are like guaranteed, almost lower time frame setups.
Okay. All right. That's awesome. Good. That's cool. Very cool. Um, yeah. That's awesome. Keep going. Keep going.
So if we notice here, what do we also see? Remember that volume imbalance that we talked about earlier? We got the
Hmm.
rejection back down. We never mitigated it. And what it means to mitigate it is essentially just getting a body close back over that volume imbalance. The fact is, we're just getting wicks into that range and then pushing back lower. That's what we need to see. So if you come here, look at this 2 minute volume imbalance. Notice how we get that rejection. Same situation that we did earlier. We tested it, never got a body close, which means we never mitigated it. So that means price is still respecting bearish price action all the way through. And then not only that, let's come here again. Look at this 2 minute. We form another 2 minute equilibrium block.
Okay.
Well, what did price do later on in time? Didn't we come back and retest it here?
Because that's an equal. I wish I could. I need a pointer. I wish I could touch your screen. But and that's an equilibrium block because that body
Look at
of
the bottom
that is
inside.
in within the body of the other candle, correct?
Yep, it's
Okay.
inside the two down closed candles.
Okay, yeah, I'm starting to see that now. Okay. And then so when you're teaching people this a lot or when you're doing it live, do you have these wicks turned off or how's that work?
I,
How's it look?
I have the wicks on.
Okay.
So next trade example, I'm actually going to show you a trade setup that we took this morning. And this trade setup was something that kind of took a little longer to play out, but it's just because the market was consolidating while ES was ripping. So with ES ripping, it gave us even more confirmation that, hey, we're going to eventually push up on NQ. NQ just needed time for data to come out and a new
Yeah.
hourly.
It was in the back stretching, drinking some
Yep.
water, trying to loosen up and get ready.
Yeah. So notice here, what do we get? We get our push down, we get more expansions to the downside, and then we see this minor retracement. At
Mhm.
this minor retracement, because you're trading the 2 minute time frame, this might look like it's going bullish for you. It may appear that way. But in reality, remember where our setup came from. Our setup came from the 5 minute time frame. So we wouldn't even expect really any bullish price action until we see it also on a 5 minute time frame. So notice here, what do we have again? Look at the 5 minute time frame. Remember these volume imbalances that we've been talking about. Notice how every single time we create a volume imbalance, it always gets respected on the time frame in which we charted it out from.
Mhm.
So coming here, this is a 5 minute volume imbalance here. Did we ever get a body close above it? No, we do
No.
not.
Mm-mm.
So because of that, what is that now telling us? More downside is likely to come.
I'm gonna be. I already told you. I think I said this in the show already. Yeah, I got my futures account going. I'm gonna definitely gonna try it on that. Definitely.
Yep. That's something I think it's more beneficial within futures trading than trading common stocks necessarily.
Okay.
And the reason why is because futures trading is very algorithmic, like extremely algorithmic. Options trading, the same thing, but options trading, I've noticed with options trading, it's more so retail concepts. Like retail concepts are probably way more powerful than smart money concepts when it comes to trading options. Like this, the bare minimum of using a Fibonacci level, using a trend line. When I trade options, that's how I trade. I don't use smart money concepts. I only use smart money concepts when I'm trading futures.
Okay. Okay. So there's difference. Yeah, there's difference. Okay. That's good. That's important. That's very important. I always get people trading common shares, especially when you're starting out. There's so much pressure to trade options. I feel like I feel like it's instead of learning how to ride the bike, you automatically want to jump on a Harley or automatically want to jump on a dirt bike and start ramping stuff. Like, dude, you don't even know how to ride yet. You don't even know how to ride a bicycle yet. Let's learn the basics, you know? So, yes, I agree. Common shares trade different and behave different than options. Options behaves different than futures, and then same thing with commodities. I mean, you can't really go into commodities or forex with this like I'm gonna trade corn like I trade common shares. You're gonna get wrecked. Like you need to study before you start putting your money on it. So thank you for saying that. I appreciate that.
Yes, sir. So coming here, notice how we form that 2-minute equilibrium block, also that 5-minute volume imbalance. What is price doing? Continuously respecting all of these levels. So let's just say you didn't enter off the 5-minute equilibrium block back up top at this range. Well, we have a brand new setup right here based off the 2-minute. So price came back, retested the 2-minute equilibrium block, and you will notice within equilibrium blocks, you really don't deal with much retracement whatsoever. The only time you really deal with retracement is when we're 9:30 out the gate. And
Mhm.
when we have pretty much a lot of volatility in the market. When we have volatility in the market, that's out of our control. The trade setup is still going to work based on our concepts, but you kind of have to have much thicker skin because there's times to where this same wick that we have right here may come all the way up here and then still shoot back down the last 30 seconds of that candle.
Yeah. So while you're so many questions. I see people trade futures with a setup just like you got, and they'll shoot. I probably shouldn't drop names, I guess, but I've seen on Twitter someone posted a really good female trader woman, and she loses like I don't know. I think it was like $20,000, like just like it was $22,000, uh, because she didn't have a stop loss in. I mean, you just see this thing just, you know what I mean? And we're not, it's easy to judge a video by watching this thing and going, yeah, you don't have a stop loss, blah, blah, blah. It's like watching the Olympics and watch somebody fall off a beam and call them dumb. Like you can't, you can't do that. Why are you calling them dumb? So I try to be careful when I'm commenting on those things, but still, she didn't have a stop loss. When you watch videos like that, I'm sure you've seen them before. When you watch videos of someone going, this trade's going against me, and then they cut the trade for and they lose, let's just say $5,000 or something, 5 grand on something. Do you look at those and go, they just got wicked out because you see the price continue to the downside? I mean, do you see those kind of videos and see that based on how you see these equilibrium blocks?
Yes, sir. There's many times to where I will get wigged out. And that's I just come to accept it. The
Hmm.
biggest thing when it comes to trading is how I like to put it in perspective is I like to create it or relate it kind of to like if you were playing blackjack at the casino. There are times to where you get 21 and then the dealer draws 9 cards and then also gets 21. And it's like there's no way, but that's the rules of the game.
Yeah, that's it.
So
Yeah.
we gotta come to accept it. We can't kind of be you can't be mad about it because it's out of our control.
That's how I talk to myself when I'm playing Uno with my kids. These little boys are cheating. These kids are cheating, Zeus. They cheating. They making the rules up. They pull out one of them green cards where they flip it, and then they cheating. They ruining the whole afternoon with this Uno. But I know what you mean. It's the rules. You just got to go with it.
Yep, simple as that. So if you do ever get stopped out and things of that nature, just re-enter the trade. It's not a big thing. Like worst case scenario, you get stopped out back to back. But if you get stopped out back to back with equilibrium blocks, I'm going to show you some examples here a little later, is you understand where price is now going. You understand, hey, just reverse your position because you got stopped out. And that's something that I think a lot of traders don't realize is if you are trying to go long and the market says, no, we're going to the downside and it invalidates your stop loss, there's like a 95% chance you could literally reverse your position and now you're on the right side of the trade.
That's good. Yeah, that's good. That's true. That's true. And then with the futures, there is no
Theta.
pattern day trading at all, right?
No pattern day trading, no theta. And then you also get your tax benefits of having a 60-40 split. So 60% long-term capital gains, 40% short-term capital gains. So
Man,
that another big bonus in why I really switched to futures more so than anything. I still trade my options, don't get me wrong, but options are more so like on a back burner at this given point in time because I don't have to continuously keep learning about options. Futures, I kind of do. Futures every day is a new learning opportunity.
Mm-hmm.
Yep.
Very good. Yeah, okay, so we're in this trade. We got more confirmation to the downside. I see no more bodies, and we get lower lows, and I see no more. Me personally, from what you've showed me so far, I'm not seeing any more equilibrium blocks. Just
Not
from
at
what
the
you
very
showed me.
given time. Now, this range here is an equilibrium block. We just have to go to the time frame and find it. So it's not on a 2 minute.
Because price is fractal. You're right. I see that too.
It's not necessarily on a 5 minute either. Not clean as day on a 5 minute at least. And then as we come into this range, it's more so like on the 10 minute time frame.
hmm
So let's go to the 8 minute and let's find a very clean. There we go. Bingo.
Yeah.
Look. So that same little range that we have here. Here we go. We have another one that formulates on an 8 minute time frame. So it's kind of like you have to go in and find where's the equilibrium block? What time frame does it look best on? And let's look at the 9 minute here for a second. 9 minute, not too clean either. Maybe the 7 minute. 7 minute is perfect. And why I say that is because notice this range here. Bingo. We now have a 7 minute equilibrium block. And this is what I mean with equilibrium blocks. They form all day, every day on all time frames. So because of that, you're always going to find a setup. It's not something like you have to force within trading to where there's days that, let's just say, the market just isn't offering the best setup. So we're just consolidating or things of that nature. Even during that consolidation, we still have a setup.
I see
That's
it.
why I love equilibrium.
I'm seeing it. I'm starting to see it. Yeah, I'm at to definitely, me personally, I have to watch this one a couple times because I always, I did the same thing with charts. He taught us how to trade ORB. I'm right out there. I'm trading ORB. I like it. I like it a lot. Um,
Yep.
I had 8X out here showing us how to trade options. I learned how to trade options like 8X, So yeah, this is the next thing. And me going in the futures, because of, I say it all the time, common shares, common shares, common shares, because it is tough to take an option. You got direction right, you got the time right, you got everything right, but for some reason you're still losing because of theta or delta or the gamma or the vega or whatever all the Greeks. So yeah, that's why I started. I'm like, okay, let's pick this futures back up. So I'm definitely gonna
Yep.
be putting this into practice.
No, I 100% agree with that. There's times to where I will literally take an options trade and I will take the same trade on futures. However, the trade on futures is a winner. The trade on options is technically it's not a loser, but you're back at break even. So it's like,
Yeah.
is it really a loser? Not necessarily because it took 3 hours to hit your PT.
hmm
It's
Yeah.
consolidated where we were in like chop or retracement and things of that nature. It still hits your PT. You still have the right game plan, but data got the best of you. So
hmm
with futures, you don't have to deal with any of that whatsoever. It's strictly price action. What is price saying?
Yeah. Right now, the market says no to the lows in this one anyway.
Yep. So coming in here, remember we just showed you on a 7 minute time frame, we had that 7 minute equilibrium block. So we have even more confirmation that prices continuously pushing lower. We're getting more respect of bearish price action. Every single bearish POI is getting respected. We're not mitigating the volume imbalances. We're creating new equilibrium blocks. We're retesting these equilibrium blocks, and then we're seeing more downside.
I like it.
And then coming in here, notice how we get that retest. Here we go. We get that starts to get that retest of that 7 minute equilibrium block. What happens? We push down lower yet again. Not only just that, if we were to come here and look at like the 4 minute time frame, chances are we have another equilibrium block back in the same exact range. So not necessarily the 4 minute exactly. It might be the 3 minute. Even the 3 minute looks a little ugly. That's I don't want to go into this concept. It's still an equilibrium block, but it's a little bit more advanced.
Yeah, I know what
So
you mean. Yeah, you're dissecting it lower and lower. Yeah, because you said price is, we know price is fractal. But yeah, I understand. So then here's a that kind of goes along with it. You're in this. I got my stop loss. I am seeing these volume imbalances, or but I necessarily need to mark all of them when it, like, for example, with the broadening formations, I tell oh, you need to draw them on the month, draw them on the week. If you have to draw them on the day, draw them on the day. But I always tell people you don't need to draw hundreds of lines so it looks like spider webs. Do you
yep,
tell your students, or the people that you work with, uh, there's a line, like there's enough, you know what I mean, that
yep.
you don't need to keep, you don't have to drive yourself crazy, you ever get to that point? No.
Yes, sir. 100%. So there are times to where I kind of personally, if a lot of like volume imbalances or equilibrium blocks are forming, I will just say, hey, stick with the higher time frame. So let's say we enter this off the 15-minute time frame instead of the 5 minute time frame.
Mhm.
Chances are you may see 5 different equilibrium blocks form before it hits your PT. So instead of marking all of these levels out, I'm only going to mark out a level that's in discount range. And what that means is essentially if we take the high to the low and then come back to 50% of between that range, that's discount range because we wouldn't want to necessarily be buying at lows. We'd want for price to retrace. And that's the thing, same thing with like hedge funds, for an example. If you're a hedge fund, and hedge funds for the most part, like the top of the top hedge funds, they know where price is going. Like they literally all like can see each other's orders and say, hey, I got $1 trillion on shorting Apple. You can see that.
Mhm.
If you have $1 trillion on shorting Apple, why would you want to short Apple at once, let's just say for this example, 175, when you could easily bring price back up to 185 and then reshort it back down?
Mhm.
So when you're thinking it in that aspect, that's where I like to say the discount range and things of that nature.
Okay, that makes sense. I like that. Yes, you're right. And they do that too. And I don't want to, yeah, definitely want to, don't want to go into a victim mentality of the market, because it's easy to go, the market makers screw me over and they're doing this to me. Now come on now. But I mean, I don't want to go too much into that, but yes, you're right. They do that. They do that. And you're right. They can see, you can go in the trade station right now and you can see where everybody, well, the retail anyway, where they're putting all their orders. And you're right, you can see all their orders for 175 and 175, 175, 175. Why are you trying to, why are you doing something else? Price, these orders keep coming in for 175. If you're watching, let's just say level two, if you're watching
Yep,
level two, you can keep seeing those orders go in. Why are you trying to do something else? It's going to go to 175. These orders are going to get filled. So,
exactly.
yeah. So, um, that's good. It's good that's psychology, and that I like that. Very good, very good. So it comes all the way down to the PT. Finally, we get all the way down to our profit target. And do you have that? Is that an automatic, like I'm selling right here? Is it an order that's already in there, or are you like hitting hotkeys? How are you getting out of that?
Could you give me 1 second? Let me use
Yeah,
the
yeah,
restroom.
good. Sorry. I'm
Hey,
talking
you're good.
too
You're
much.
good.
Oh, he's going. Oh, okay. He's leaving. I didn't know that. I thought he was gonna. I thought I was talking too much. So, yeah, definitely gonna be trying this on the futures. Me personally, and I like this too because you can see these 5 minute time frames. I know we're on the 2 minute right now, but if you can see the timeline on the bottom, he's in this trade a lot longer than 15, 20 minutes. A lot of guys that trade futures, they're constantly on the screens for minutes at a time, and yeah, they're constantly on the screen for hours at a time, but they're only taking like, two, three, trades, 5 or 6 trades, but they're only lasting 2, 3 minutes long. You know what I mean? Or 10 minutes long. So like I said earlier, they're taking a trade and holding it for 10 ticks, 6 ticks, and they take their profit. So definitely Zeus has shown us a system that we can use that can stay in this thing a lot longer. And I love this because I did I love that we're talking about futures because I did a little Twitter Spaces called the Wake Up Call. So I'm going to do it again this Saturday. But the wake up call, and one of the guys said, "Hey, can you get somebody on here to talk about futures?" So I did not plan on us talking about futures. So I love that we're talking about futures. That's really cool. So yeah. So what I asked was, when we get down to our profit target, our PT, when are we is that an order that's already in there? Stop market order? Is it a limit order? What is it? I always talk about using stop market orders. Why stop market orders? Because I know it's going to get triggered and I know it's going to hit. All right. If I use a limit order, it might go, it might not go. I want to stop market order. I want to get out if it hits this level. Same thing if it's a stop loss. I'm using a stop market order. I want to get out. If it hits at this price, I'm getting out. I'm not messing around with a bunch of silliness. I'm just not going to do that. So very cool. I love this. I'm really gonna. I can't wait to try it. I cannot wait to try this thing. Let's see here. There definitely going to be a lot of questions in the chat on this one, just because it's good stuff. It's good stuff. So while we're waiting on Zeus to come back, I'm sure he's trying to set something up for us. He's going to definitely talk about a trade that he took live. That's really cool. Very cool. And so these volume imbalances, let's see if I can find any of them on these regular old things here. I'm sure you're gonna get back on here and tell me I did it wrong, but I don't know, let's try it. Let's see what happens. Let's go to QQQ. Let's see here. Give me a 5-minute chart. Let me make it all one big chart just so it's easier to see. Let's see. See if we can find some like the practice. Volume and balance. Blocks. Let me see. Any blocks? Oh, he's back. Let me see here. I'm trying to find any. Maybe you can tell me if I'm doing this right, Zeus. Can you see my screen? Is that one? Is that a volume imbalance? Is that one?
So if you actually look back a little bit further to the left.
Okay, hold on. To the left. All the price action to
About
the
12
left.
o'clock. 12 o'clock.
Right here. No, at 12 o'clock. I see. Oh, time. Okay. 12 o'clock. 1300. 12 o'clock.
There you go. You're starting to see them. You're right there.
Right here?
There you go. You see that red candle?
Yeah.
There we go.
Okay. So because the body is in this one. So why is this one an order block, equilibrium block, and this one is not necessarily? Oh no, because okay, hold on. What did I see before? This guy? No, what did I see? This one right here. Is this one equilibrium block or no?
Because the candles have to be either 2 down close candles and 1 up close candle, or vice versa. Now, if you stay exactly on that time frame, now go to the 10-minute time frame.
I think you made a distinction that we need to say one more time. Let me get I gotta get a square. Anytime I change, let me see here. I gotta get another. All right. 10-minute time frame. Where were we at? We were at 12 o'clock ish.
Yep.
She said 2 close down.
So look at that 10-minute. Notice how that 10-minute just formed another one. Back to the left, that one right there.
Here.
Yep.
Yes. Yep. Okay, so I think you said something that maybe I wasn't understanding, and if I didn't understand it, I know somebody else in the crowd did not understand it. You're saying it needs to be 2 down closed candles with 1 up close. Say it again, one more time.
So in this example, we have 2 up close candle. In between the 2 up close candle, we have a singular down close candle. Now within that down close candle, between the first and the second candle, we have a body that are inside both of those ranges. And that's what creates the equilibrium block. Keyword, the bodies only. Notice how that red body candle is inside of both of those green candle ranges.
So we're comparing it not just to this candle, but also the candle in front of it.
Sure.
Oh, okay, so we need all okay, okay. I'm sorry. Hey, I'm connecting the dots because you said it is a 3-bar setup. So you need 3 bars, 3-bar setup. So let me try one more time. I like this. This is good. All right, we're practicing. Let me get one more, and that's my alarm. We're definitely. I'm not cutting you off, but at the same time, I don't want to waste your time. Let me see here. I want to get this right so bad. So I got 2 up close candles, but in the one in the middle, but that's the body's not in that one, so that's not right. I'm not afraid to look dumb. Let's see here. What about this guy right here? I got 2 up closed candles and then one little one. What do you think?
Yes, that's it.
Uh-oh.
Understand.
We are learning something right now. All
This
right.
gets very deep. This gets very deep. And now look at the previous up down close candle. The other down close candle. There we go. Notice how we have that one too, right?
Mm-hmm.
And then look back to the right and look where price bounces from. So if you
Yep. Mm-hmm.
look at that down close candle, that red candle about 12, that one, yep,
Yep.
1240.
It comes
Notice which
all the
one
way down inside. It comes into this range and then does
fires
it
entry.
stops and then continues up.
There you go.
So, oh man. Okay, hold on. And then we'll get back to your charts here in just a second. But let me see here. Let me. I got one of them too. Hold on. I got one of these jokers. Get over here. Where you at? What happened to you? I got one of these dudes. So let's just example here. Let's try it. Now I know we'll be doing this on futures. I understand that. This is just a practice. So maybe stop would be right.
Bottom, the wick of that red candle.
So
Yep.
right there. Okay. And then let me see if we can find a good. This is 10 minutes. So if we can find a good, these are all a good
And you can target the most recent high right there.
right
Yep, that
there.
one.
Okay. All right. So
And then
maybe
you're
I don't want to. Greed's not bad, but this. So I wouldn't want to use this one. I want to use the most recent one.
yep.
Okay. So
And then
something.
you
Go ahead. I'm
entry
sorry.
the start of that equilibrium block. So you'd want to drag that entry level up to the top of that little box.
Okay.
Just to yep.
Yeah, let me see if I can do that.
You might have to drag yep that one right there.
Yeah.
Drag
Let me
that
see.
down.
I'm gonna have to drag this up and then push my stop down. I see.
Oh, yep.
All
There we
right.
go.
So it's gonna something similar to that.
Yes, sir. And then where your take profit would be, your first take profit would be at the top of that most recent high. So you would come back and then you would put it back from the highs. Yep, right there. Perfect. There we
Bam.
go.
So okay, so if this is live, how I'm only seeing these, right? I'm only seeing this bar. I'm not necessarily seeing these. Am I saying that correctly?
Yep.
Okay, so these bars don't exist. For example,
Yes,
okay,
sir.
how do I know this is going to be my take profit? And I'm not, I'm not trying to pick your thing apart. I just want to understand how would I know if this is my take profit if doesn't exist yet? I'm basing that on a higher time frame or something?
Not at all.
Okay.
Because notice how price never retests into that 5 minute equilibrium or 10 minute equilibrium block, I should say.
Mm-hmm.
Price never gives you an entry. So because price never gives you an entry, we don't chase price. Price has to come back to that level. If it does not come back to the level, there's no trade setup. Now, at some given point in time, 30 minutes goes by, 40 minutes goes by, we now start to see price start to retrace a bit,
Mm-hmm.
which is now starting to signal, hey, we have an entry model. Where's our PT? We can target that price target right there, or we could look back further left and say, hey, well, where's the next price target?
Okay. Yeah, we'll probably shrink this down pretty far. These are 10-minute charts, and okay, all right. For the sake of the show, we're gonna keep that going. But I like that. All right, hey, you saw it first here. The Strat Soldier learning this stuff live. I know this is a recording, but I'm learning this stuff live. I love that. I like to trade. Number one, I like to study stuff that works, and I like to practice things that are easy to pick up. All right.
Yep.
After I pick it up, yeah, I mean, I am in the army, and we learn concepts that are easy to pick up. After I know how to execute the skill, I can build from there. If I get to a point where I get so advanced where I think you know what I mean, I get a little mixed up, you know what I mean? I don't know why this is working. I can always come back to the basics. So anybody watching this right now, Zeus has a lot more to show us. But these are the basics, and honestly, I'm not saying I got it, but I have effectively identified it, equilibrium, and then my entry, the stop level, and then my take profit is right there on the screen. So you can do this too. You can do this too. That's awesome. I am excited. Let me see. Let me stop my screen share and get your thing back up. And yeah, you go ahead and screen if you want to share. Yep. Bam. We're back to where we were. That's awesome. I'm really liking this. I'm liking this a lot.
Yep. So coming here, we eventually end up getting that push down and hitting our take profit here for what is that, 7.48 risk to reward trade. These are the
Mhm.
type of trade setups you want to take 100% of the time because you got to understand trading is a numbers game. So once you understand risk management, hey, if you target a 2-to-1 risk to reward trade, you literally need a 34% win rate to be profitable. 33% you're break even, 34% you're profitable. So once you understand that aspect, keep pulling. Like I can't stress that enough. Keep pulling. If you get stopped out, it's a-okay. Because at the end of the day, over a series of 100 trades, you're going to be profitable if you stick with the same exact system.
Yeah, that's true. I agree with that. All right. And that's the discipline thing
Yep.
because you can replicate discipline, you can't replicate luck. My goodness. I might have to put that on Twitter tonight and blow up the spot with that one. That's good. I'll credit you, don't worry, because that's a good one. I was talking to Ryan Faluna, and one of my very first interviews with the Strat. He had a really good one. We don't trade with hope. We don't trade with hopium. Hopium's not a trading strategy.
What is it?
So, but I like yours too. Very good. So I'm already excited about this. What was the one that because I was able to actually replicate what you showed me, what shows me definitely it's easy to learn. Doesn't mean you know what I mean, but it's easy to learn. Doesn't mean it's simple, but I'm definitely not saying that to downplay anything we got going on. So what did you do live today? What was going on in the charts today?
So this was a setup we took on live today this morning. It's essentially we wanted to target internal buy side liquidity. So this is the most recent pivot point because obviously we're in a downtrend. And this was like the first time that we pretty much seen price offer a little bit of retracement and then push lower.
Mhm.
So because of that, that's our buy side liquidity target. Now, if we come back to the 5-minute time frame, what do we have here? 9:30 out the gate. Well, our handy dandy equilibrium blocks.
Equilibrium
So
block. Got it.
notice how we form the same one. Look at the body. Look at these
Mhm.
three candles. The body is inside both of these up close candles, right? So because of that, that now creates your equilibrium block. So we want to mark that level out. Now, yes, if you have a hard stop loss in place, by all means, you would have gotten stopped out once price pushed down back here at 9:30. However, I actually didn't enter the trade directly at 9:30. I actually waited a bit and because I use multi-time frame analysis, so once you do use multi-time frame analysis, you have a pretty good understanding of, hey, is price respecting this level or not? Because we can just look at the 1-minute time frame. So 9:30 out the gate, I saw price push all the way down to this low. Now, what you're also going to notice is at the literally like the last 1 minute of that 5-minute candle, price came and shot all the way back up and reclaimed that level. Once I saw that, that's all I needed to know that buyers are here 100%. 100%. You couldn't tell me twice. Because if buyers weren't here, they would have never allowed price to shoot back up with 1 minute left in that 5-minute candle. But the fact is that they did, that told me everything I needed to know. So if we come here, look at the 1 minute here for a second, you're going to see exactly what I'm talking about. Notice here, 9:30 we shoot down, right? 9:32, we come all, or 931, my apologies, we come all the way back up and reclaim that same exact level of the equilibrium block. So by understanding multi-time frame analysis, you can kind of use the pieces together and say, hey, the 5 minute looks like it may close below the equilibrium block. But if you don't actually get that body close, well, you're never really stopped out to begin with. You just got faked out. And that's
Right.
what I mean by creating NQ. NQ, there's times where NQ will literally just fake you out. Simple as that. But once you understand that, hey, you got faked out, your trade setup was never invalidated, just re-enter the trade yet again.
Mm-hmm.
So here, coming back to that 5 minute, I saw price pretty much respected. It literally tested it 6 times today. 1 time, 2 times, 3 times, 4 times, 5 times, and 6 times.
Wow. Mm-hmm.
So
Wow.
whenever you see a market like holding your level 6 different times, you should be pretty confident that, hey, buyers are there or sellers are there, whichever way you're trading the trend. In
Mm-hmm.
this example, we had a bullish 5 minute equilibrium block, which is implying we want to take it to the upside. And then the moment data came out at 10 o'clock, well, notice what we did yet again. We came back to our same entry level, and literally within the next 15 minutes, well, we were at our price target.
Very good. No, okay, so now you're at your price target. I gotta take it one more step. You're at your price target, bam, it hits. But daggone it, it's still going. All right, what do? Do we start the whole process over, or do we say keep it where it's at and just get back in again? How do we deal with that? Or do we say we hit our price target, we're done? Is it a question of discipline or is it a question of still good?
So with this trade specifically, I closed out completely once I hit PT, and it's because it's Fridays and it's OPEX on top of that.
Mm-hmm.
I don't want to be in the market on OPEX. I want to find one solid A plus setup and be done because it's
Okay.
OPEX. Now, let's say this is a regular Friday, or let's just say this is like a Tuesday. If this is a Tuesday, by all means, I'm holding this trade. I'm trimming off 3 contracts, leaving the last contract to run.
Okay. I like that too. All right, that's good. That's
Yep.
good. All right.
So
Um,
it's kind of being aware of what market you're trading, what the environment looks like. With OPEX, OPEX tends to have I wouldn't say terrible price action, but more like a one and done type of trade. You get one clean setup, and then the rest of the day is just consolidation or back and forth price action.
yeah.
So
And
because of that, I
no,
wanted to trim it. Yep.
no, go ahead. I'm sorry. I thought
Oh,
I
no, you're
answered it. We're doing it. We're in a cycle. Go ahead. Talk. I'll shut
good.
up.
So with OPEX, I want to just essentially be done with my trade. However, if you did hold on to this trade, well, notice what we did. We eventually came back to take out the higher time frame buy side liquidity. Pretty much we had this level up here. We never actually pushed into high of the day, but you did have more PTs to where you could have extended this trade almost up an extra 100 points, which is $2,000 per contract on NQ.
Man, I yeah, that's amazing. That's amazing. I totally forgot what I was interrupting you about, so I'm glad I stopped because that makes it so good. So I'm glad you're able to show us this. And are you trading with a prop firm? Or are you trading with your own money? I've seen the charts. I've seen your the trades that you do let us see on Twitter. Uh, I guess that's my next question on that. Are you doing a prop firm or is this all your own capital?
So I do both actually.
Hmm.
So whenever I'm trading a higher time frame setup, I have to be on my own personal account. And the reason for that is because there's times to where when you're trading a higher time frame setup, price may overlap into the next trading session. But if you're in a prop firm, the moment 415 hits, your trade is done. You can't
Ah,
hold it up. So when I'm trading something, maybe a 4 hour equilibrium block or something of that nature, that's where I'm going to be on a live account.
okay,
But if
very good.
5 minute time frames, I'll take the prop firms all day. And then I almost suggest the prop firms just because it's such a low risk entry barrier for trading.
Yep,
You don't
I've been
really have
suggesting the
to.
same thing. Go ahead. Hmm.
So with the prop firms, you don't have to have the crazy capital. Literally, if you have $50, you can get funded up to 50K. And then from there, pretty much pass your prop firm, hit $3,000 in profit, and then you're on your way to being funded. And with Top Step specifically, I recommend Top Step over like Apex or anything else of that nature.
Okay, cool. Very good. Very good. Lots of information in this one. I remember what I was going to say now. For the new people in here, when we talk about OPEX, it's the options expiration. Okay, expiration. That's always on the third week of the month. All right, third week of the month.
Yes, sir.
So that's for the new people. Yes, and price can be wonky, whether you're trading options or not. Yeah, I've been in common shares and something, and it's just like this is either it's consolidating because people are getting out of positions, people are starting positions, hedge funds are offloading stuff, institutions are doing whatever they do. That's why I told everybody to be careful today, just because it is a Friday. We've seen our trend. It's been going really well. And I was waiting for is Friday to come up and say, and the sellers go, buyers to say, we got what we wanted. They start taking profits, and the sellers go, okay, we're going to wreck this thing all the way back down to the lows. I'm glad that didn't happen today, on Friday. Today's August 16th. So I'm glad that didn't happen, because that would have been a bummer. So, but the way you do it, you probably wouldn't have cared. You've been like, all right, good, it's go time. Let's take this to the lows, take them down.
I literally said that on live today because price continuously tested the 5-minute equilibrium block, like came really close down to our levels every single, like literally almost every other 5-minute candle. So I literally told everybody, I said, hey, if we close below that 5-minute equilibrium block, we're just going to take a short. Simple as that. So it's like, I never care to be wrong because my edge is so effective that, hey, if I'm wrong, reverse my position and I'm right.
That's good. I like it. I like that a lot. Man, I'm excited. I'm excited to try this. Is there any other examples you want to go through? I don't want to keep you too long. Is there any other examples or any other tips or tricks you got for this? I mean, you said it was really advanced. So I don't know what to ask next. Yeah, I'm just happy that I was able to identify it, and I'm going to be playing with this at least the rest of the night and this weekend. Definitely, definitely.
So I'm going to leave it on that note.
All right.
If you want to learn more about the equilibrium blocks, you can easily watch it on my YouTube channel. I have a couple different videos that kind of goes into that and into these concepts with live trades examples and things of that nature. And then they also kind of talk about the change of state delivery equilibrium blocks. And that's pretty much where your equilibrium block, like for this example here, let's say we did get a body close below that level. Well, chances are price is going to offer us a retest of the same exact equilibrium block before pushing lower. So if you're interested in that, you can just check that out.
Yeah, definitely. Definitely. And then well, we'll put all your links to all your stuff up, and I'll definitely get that on my Twitter, and we'll re-share your stuff too. I ain't gonna lie to you. Me and a couple other stratters, definitely me and one in particular, I'm thinking in my mind. This was maybe last year, maybe let's just say last year for the story, okay? And you're like, okay, here's this video on how to trade options on this thing. That's how I do it. And me and this other stratter went and watched it, and I like, I got done with it. I was like, I see what he's doing, but I don't know what he's doing, and I don't know what I saw. I don't know what I'm doing. I say it as a funny thing now because I'm seeing it now. You explained it very well with the equilibrium blocks. But I mean, at that time last year, me and him were like, I don't know. I mean, he knows what he's doing. We can see him make money, but there's so many PTs and ORBs and EBs and IVs and SLBs and SOBs and all this stuff. I don't know the hell. What is this?
Yes, sir.
That was last year. That was last year. And like anything, anything, it all seems like, nothing makes sense, You're like, what is this, But then you start learning about it, you start, getting some experience with it, then you can say, okay, all right, this is this and that's that. And all of a sudden now you're starting to see things. So and now it's starting to make sense. So now I got to go back and watch these old videos and feel dumb.
Yes, sir. I mean, it's all about just continuous learning with
It
trading.
is.
And that's the thing what I love about trading as well. It's like you're never really gonna reach that peak. every single trade, even for this trade, for an example, I'm going to go back and journal it this weekend and I'm going to say, hey, I probably could have left the runner. That's a way to improve. Like, so something with my trading when I journal my trades is I always try to write down at least one thing that I can improve on. I kid you not, when I say like a perfect trade, I have probably one perfect trade a month. And that's where what I consider perfect trade is there was nothing I could have improved on. Absolutely nothing.
I
But
like it.
trades, there's always something you could have done that could have made you more profits.
Okay, so last question, I promise. Uh, do you trade? Are you Oh man, this is going to lead into two questions. So give me two questions left, I guess. Just because when you're trading, are you trading for the week? Are you trading for a month? Let's just say you have four good trades for the month, and these are big wins. Uh, do you say, okay, I'm done. I'm just going to watch it, or are you consistently in there every day or every week? Like, what's your frequency?
So I don't like necessarily limit how many trades you take. And the reason behind that is because if you see a setup is a setup. It doesn't matter. Let's say the chart offers 90 setups in one day and all 90 of those trades works out. Well, then you just sold yourself short of income that you could have potentially profited on.
Hmm.
And you're going to go back and journal them and like review the charts. You're going to be like, wow, this one worked. This setup worked. This setup worked. This setup worked. But then it's like, how many did you actually execute on? So I never limit myself to necessarily how many trades that I might take a month or a week or something of that nature. But what I do limit myself to is really no more than 2 trades a day. And it's
Okay.
because I kind of prioritize my freedom rather than watching the markets.
And I've seen that freedom. Again, we were supposed to do this last week, and then I see on Twitter, yeah, I just got off the plane from France. I just got off the plane. Like, you know what I did over last weekend? I went to the grocery store and maybe the gas station. That's what I did. You got Zeus out here flying in planes, just now you probably not even seeing nothing, just bored, looking out the window, the plane yawning.
Hey, that's just what I like to do. I like to experience different cultures, man.
Do it, man. Do it. And you're doing a great job at it. I love it. Minimize the screen real quick. I'll give you cut this thing off, and then we'll give you one last time. This is Zeus Trades, and then where can we find you on Twitter? And then one more time for your Discord, and then I'm gonna let you go.
Yes, sir. So you can find me on Twitter at Zeus Trades. All of my socials is at Zeus Trades, YouTube at Zeus Trades, Instagram. I don't really post on Instagram, but if you want to follow me, hey, cool. You can follow me on Instagram as well at Zeus Trades. And then currently at this very given point in time, we're actually running a mastermind. So with the mastermind, it's essentially teaching you everything that I know about trading from A to Z in a 6-week course. And I'm
Nice.
confident enough with that 6 weeks is really all you need. And I've seen it from my previous mentees. The biggest thing is like, do you have the discipline and are you going to essentially listen? That's what it comes down to. If you have that and you're willing to actually learn and put in the work, then the mastermind is for you.
I
Within
like
6
it.
weeks, I'm confident that you will be a profitable trader.
Very good. I like this is a great interview, Zeus. I learned a lot. I'm gonna go watch those YouTube videos, and again, the quote of the show is, "You can replicate discipline, you can't replicate luck." I freaking love that. That needs to be freaking T-shirt. That's awesome. I'm gonna let you go, man. Thank you so much for being here.